So I've been trading gold for over 4 years. I'm going to show you the exact approach I use to catch trades like these every single day. And this strategy has an 83% win rate with a simple 3-step process. And I'm going to show you the most important things I focus on when trading gold. So I trade gold at the second hour of Asia every single day. You don't have to trade at Asia, anytime works. But what's important I find, I get a really high win rate when I'm trading around that new 4-hour candle. So when a 4-hour candle closes and a new one is opening right here, I find I have extremely high win rates, and it's a lot easier to find direction and entries when I'm trading around a new high time frame candle. So this is a trade I took this morning with the exact strategy that I'm going to show you with my Discord for a pretty simple, clear 5-minute trade. So there tends to be high volume at that new 4-hour candle open, and this is why I recommend to trade that open. So I trade purely based off price action, which can be broken down into market structure and candle behavior. I also use DXY correlation with my trades, so that's the dollar index, which is inversely correlated, which I will cover later. The first step is just to identify an overall direction. This can be bullish, it can be bearish, it can be range bound. That's still a direction, it's just sideways. The second step is to find an area of interest. So this is where I'm looking to find my entry model, which is a third step, which is an entry model. This can be a shift of market structure. It can be a break and retest. It can be a higher time frame candle close. I'm going to cover the ones that I use and have found the most success with, but this simple 3-step approach is what I use to get an 83% win rate. It's like pretty simple. It doesn't have to be overly complicated. I also use top-down analysis, so starting on the higher time frames and entering on the lower time frames. So first off, I'm going to start off on the daily time frame. We have a really strong high time frame close bullish, so really big body, close above previous highs, and that's really strong bullish close. But am I going to be looking for buys? No, I'm first going to be looking for it to create a bottom wick, fill in some of this move, as price tends to move in a push and a pull. So being mindful of the time of day you're trading at is really important. So we have a previous 4-hour close bullish. We've broken above these highs after taking out a low. So kind of a shift where we made a low, broke that low, went into break a high, and then had a continuation bullish. So 4-hour is aligning bullish with the daily as well. Then if we just go on to that 11 a.m., so this will be the 11 a.m. open of that new 4-hour candle, we do have a 4-hour close bearish. So overall high time frame is looking bullish, but we're not looking for buys. Why is that? We're going to kind of cover that now. Just being mindful, we are at all-time highs on gold. So we are around a higher time frame area of interest. You also had this 4-hour close bearish here. So 4-hour close bearish, creating this little area of interest as well. Open close as well. So if we just drop down to that 1-hour time frame as well, you have an hourly close with that 4-hour close bearish. Yes, high time frame structure is looking bullish, but you had a really big push up here. You also had a really big push up here, and you're at some highs. So price is a push and a pull. If you want to continue moving bullish, it's unlikely that you just keep on pushing. Price will tend to get exhausted. You have a pullback first, and then you'll continue. So I find this tends to happen around the start of the day. If you have a really big high time frame close bullish on the day, the start of that next day will tend to create a bottom wick first, create a bottom wick, and then flip bullish and continue on. If we just go down to this alley, I place a level at the open and close. So when you go from a bearish to a bullish candle, bearish to a bullish candle, or a bullish to a bearish, that would be a level there. And I just draw a zone or area around where price is reacting to. So being mindful of overall high time frame structure, that overall bullish bias is actually giving us reasons to sell, because we're first looking for it to create that bottom wick and then move bullish. And you're also at a high time frame area of interest, kind of like a resistance level. And you have that 4-hour candle close bearish here, 4-hour close bearish, with also, if you look here, you have an hourly close bearish, this candle, and you also have a 30-minute close bearish, and you close below the open close below this structure. If a candle closes in a certain direction, let's say bearish, you're first going to look for it to create a top wick to then flip and continue that direction. Overall daily time frame has a close bullish, so you're looking for it to create a bottom wick, but 4-hour, hourly, and 30-minute close bearish, so you're looking for it to open, create a top wick on that 4-hour, then flip to push down, create that bottom wick on that daily. So you're kind of stacking time frames to find direction and to really look at how price moves. And doing this will give you a really high win rate. This is like one of the most important things that I found for finding direction. But that's mainly counter behavior. For market structure, what are we looking at? If we were just to zoom out a bit on market structure, you have an overall shift bullish. So yes, you have that daily close bullish, but what does it look like? You break a low you have highs around here, and then you break a high, come back in to retest that high here, and you continue pushing bullish. So based off market structure, that's how you kind of find that high time frame bias. But connecting low time frames and high time frame candles, this 4-hour, hourly, and 30-minute candle closes bearish also aligns with, let's go on the 5-minute time frame now, this 5-minute shift of market structure. So what does that look like? You create a high here, create a new low, and then create a higher high. So you have a break of a high, and then you immediately come in and break a low. So exactly how we were looking at that previously for that bullish breaker structure, you're now looking at that on that bearish structure. So low time frame wise, we're looking very bearish because you have those high time frame candle closes bearish, and you have this 5-minute shift in market structure. If we then were to go down into a 1-minute time frame, you still see that bigger shift in market structure, but then we can refine that further. But if we just look at this low time frame structure, we have kind of these lows and these highs. This could be like a lower time frame area of interest. We've gotten our direction. We've gotten a lower time frame area of interest. This is kind of the area that we're looking to take a sell. So then we just wait for an entry. So this would look like on that 4-hour, we're looking for it to open, create a top wick, maybe react to this level here, and then flip and continue bearish. So we immediately open, kind of go in each direction, and then we start moving bullish. We have a pretty strong reaction to these highs here, really strong reaction. What is that? That's about 6 pips of movement, and you have a big close bearish. You even break the low of the previous candle as well. So exactly how we're looking like on the 4-hour time frame, where you have a bearish close, looking for it to create a top wick in that first half of that candle to enter for a good entry. I'm going to do the exact same thing on this 1-minute candle, looking for it to create a top wick in that first half of that candle. Because this price is fractal, patterns happen on every single time frame. It's fractal, just for a better entry. And this is how you refine, get really nice risk to rewards, really nice entries with a high win rate. And my trade is on average around 5 to 10 minutes, a really quick, simple trade with volume. We're above the open. The best sells will always be above the open. The best buyers will always be below the open. We immediately create a top wick first here, respect that high, these highs, and then we drive bearish here. The 4-hour candle flips, and I just took my take profit at around 1 to 2. So pretty nice, simple trade. Then we move on to create that bottom wick with lots of volume in that first half of the day, bottom wick on that daily time frame. And then we have a shift to structure, and then the day flips and continues moving bullish. So hopefully this helped with aligning time frames, top-down analysis, direction, area of interest, and entry model, which can be a shift, it can be a break and retest, can just be a 1-minute candle close in your favor. That refinement of those areas of interest of everything allows me to get an 83% win rate with that simple 3-step approach and really high quality trades there. And you could have used the exact same thing for this buy as well. So you have a clear break of a low, then break of a high, a pretty clear simple shift with a pullback. For that continuation of that higher time frame trend, you created a bottom wick. Now you've had a shift with lots of volume in your favor for a really nice, clear, simple trade. On that 30-minute bottom wick being created as well for a really nice trade. And just as well, another thing that I was looking at, whenever you're looking for a sell on gold, I'm always looking for DXY to be the inverse, so moving in the opposite direction. Gold was looking pretty bearish, but what I was looking at was a previous area of interest on the 30-minute time frame, and we had a nice reaction to this low here. Same reaction to these highs. We moved off this low for a pullback, so price is always going to be a push and a pull. You can be low on DXY, but if you're expecting a pullback on that, you can use it as added confirmation of that DXY expected pullback to take a sell on gold to continue moving bearish. And so that's the strategy I use to get that 83% win rate on gold, trading with DXY correlation and that shift of structure, that 1-minute shift of structure, where you're going from making a new high to a new low, entering on that pullback for a continuation of that trade. And that's a sell. If you're looking for a buy with that overall higher time frame, you can look for a break of a low and then a break of a high there with a high time frame candle close in your favor, such as that 30-minute for a continuation of that trade.